G'day folks, welcome back to another update for the S&P 500 and the NASDAQ. Now both are hitting resistance, but do watch that divergence on both of the daily charts. We're going to include some back testing, and before we go any further, make sure that like and subscribe button, that'd be greatly appreciated. Also, don't forget to reference the +1 videos, which we go deeper dive into some of the trading strategies of which we cover in our videos. In terms of the outlook, as of today, September 29, both the S&P 500 and the NASDAQ show solid earnings growth expectations, supported by anticipated Fed rate cuts and moderating inflation. The S&P 500 is projected to deliver about 9 to 10% returns, with broader participation from cyclicals and financials, though risks remain from trade tensions and margin pressure. The NASDAQ is more growth-driven, with strong momentum in AI, semiconductors and cloud, but faces higher valuation sensitivity, regulatory risks and volatility. Overall, the S&P offers steadier breadth, while the NASDAQ carries great upside potential, but with sharper downside risk. So looking at the S&P first, we always look at the longer-term trends. And on the weekly here, you can see the price is well above the moving averages, although notice the declining highs on the CCI, and that's a bearish divergence. Now it hasn't started to pull back yet, so as soon as it starts doing that, we'll then draw a projected target area. On the daily, likewise, we do have a bearish divergence, declining. It's hard to see there, but that is a declining highs on the CCI versus higher highs on the price. And again, it's hitting this resistance at 6,700. Bounce down towards a moving average range, but it's still bullish on the price, although the CCI is showing a potential bearish outlook so far. Now, in terms of the price, it's bouncing off that moving average band, approaching this resistance at 6,700. So for it to be more bullish, I'd like to see it break through that resistance for further upside momentum. On the hourly, and again, it's always worth looking at the micro trends, even if you're trading on the daily. Since our last video, it did hit this resistance drawn here, and it's bounced down from there. You can see there's a bit of a down swing, a bit of a retrace, and it's finally broken to the upside again. So again, if you're trading on this, you go in the direction of the daily time frame. So you're going long only, you don't take short trades. So you would have been taking long trades in that little period there on the 1 hour time frame. In terms of the back test, what we've done here on the 1 hour chart, again going long in the direction of the daily, although just be careful of this bearish divergence. I've started back here around about, as far as this chart goes, around about early May, and going long. Now again, for each of these periods, you would have closed it out at the very latest when the daily hits that moving average range. So the first exit would have been at that point there, and you would have avoided that drawdown on your account. And also pay attention to any of these bearish divergence throughout the whole 1 hour chart period. Again, another bearish divergence there. And more recently up here, you would have avoided that drawdown had you paid attention to this declining CCI and declining price moving average as well. You should have got out of the trade around there. You might have had a contract open, but again, take your small losses rather than waiting for that massive drawdown. That's the S&P. So for the NASDAQ, similar picture on the weekly. First off, you've got a bullish momentum on the price, although we've got a slightly lower highs on the CCI. So again, that could be the start of a pullback or a retrace. But again, at the moment, bullish momentum on the weekly, which means you can take long trades on the daily if you're trading on the daily. And again, looking at the daily here, similar to the S&P, we've got a bearish divergence as well on the CCI versus higher highs on the price. Hit that resistance at 24,780. Again, similar to the S&P, it's also bouncing off that resistance, that moving average band, and coming back towards that resistance. So just be mindful of that. I'd like to see it break above that resistance again to be more bullish. And if you on the hourly, looking at more detail, again similar pattern. Had a bearish divergence here, broke down. In this case, if we drew a Fibonacci range on the hourly, we take it back to the significant low before that divergence started. So you would probably take it back to that level there. And you can see there the 23-38% target range was penetrated, and it's bounced out of there. That's our minimum target range to expect. So on the hourly, that's where we are. And at the moment, the CCI and the price are bullish, showing bullish momentum, which means you take long trades in accordance with the daily. The daily is bullish on the left-hand side here, and you'd be going long. But again, you would have opened up an initial entry at that more recently. You've had a few little trades happening there, And this particular strategy enters and when the CCI is above the moving average, and so is the price, and it takes a 0.03% gain at each of those little trades. So you would have had a few little trades there. And again, you should not have entered long during that period. I've just got the back test here running throughout the whole period to show you what the effects would have been. Again, here you can notice here a massive drawdown, and the way you would have avoided that. First off, notice back here on the daily, it hit that moving average band, and you would have got out of the trade on near that candle up there. And that was somewhere during that little decline on the 1 hour time period. And again, notice the 1 hour was showing a bearish divergence versus higher highs in the price. And eventually the CCI and the moving average of the price started to break to the downside, and you would have got out maybe with 1 or 2 contracts open. But again, you would have got out early there and avoided that drawdown. Make sure you hit that like and subscribe button to support the channel. But also, if you enjoy the content, subscribe at least on a free trial to my Patreon page, where I publish weekly bullish shares across regions of the world's markets. Thanks, and talk to you in our next video.